Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings, and today we're diving into Mutual Fund Series Trust's latest quarterly filing to see what is going on with their investments. Get ready for a look at some serious money moving around in the market and understand what it means for investors watching these reports like a hawk to get a sense of where the markets are headed. Before we jump into the numbers, if you love getting clear breakdowns of these complex financial documents, make sure you hit that subscribe button. And hey, if you want to chat more about these filings and connect with other finance enthusiasts, join our Discord server, it is linked in the description below. So what is the big picture here? This filing is a snapshot of how these funds are doing in the market. It tells us what they're invested in, how much money they have, and how they're performing. We're going to decode the most important parts of this report, especially the financial tables, to give you a real understanding of what is happening under the hood. This report comes from Mutual Fund Series Trust, an investment company. They're regulated by the US Securities and Exchange Commission, or the SEC. Think of them as the overseers of the stock market. This form is called an N-CSR, which is basically a certified shareholder report. It is filed every 6 months, giving us a look at the fund's performance and holdings. The reporting period we're looking at is for the 6 months ending the 30th of September 2025. Now, let's get to the heart of it, the financial tables. These are where the real story often lies. If you look at the asset weighting for the Alpha-Centric Income Opportunities Fund, what is really striking is where their money is. A massive 96.8% of their total investments are in something called non-agency residential mortgage-backed securities. That is almost everything. They also have a small slice in common stocks at 2.0% and exchange. Traded funds at 1.0%. This tells us they're heavily focused on the mortgage market. It is a strategy that can potentially offer good returns, but it also comes with significant risk. Looking at the sector weighting breakdown, it paints a similar picture. Asset-backed securities, or ABS as they call it here, make up a huge chunk at 81.8%. Then there is CMOs, which are collateralized mortgage obligations, at 15.0%. The rest are pretty minor, like financials and fixed income at just 1.0% each. This confirms that the funds are primarily invested in securities backed by pools of loans, particularly mortgages. When we dive into the top 10 holdings for the Alpha-Centric Income Opportunities Fund, it is all about these mortgage-backed securities. The top holding, Carrington Mortgage Loan Trust Series 2006. Free 1 makes up 13.4% of the fund's net assets. That is a pretty concentrated bet in a single security. Then you see other similar trust names like SIP Mortgage Loan Trust and Option 1 Mortgage Loan Trust. This really hammers home their strategy of focusing on specific types of mortgage debt. Let's quickly glance at a few key stats. The net assets for this fund are a hefty $247,633,869. That is a lot of money being managed. The portfolio turnover rate is 10%, which suggests they're not actively trading in and out of positions, but rather holding them for a while. This aligns with a strategy focused on mortgage-backed securities, which are typically held for longer terms. Interestingly, the report mentions material fund changes and states no material changes occurred during the period ended the 30th of September 2025. This indicates a stable investment approach during this period, not a significant shift in strategy or holdings. Now, the report doesn't just present data, it also talks about costs. For Class A shares of the Alpha-Centric Income Opportunities Fund, the costs for a hypothetical $10,000 investment were $93 for the 6-month period. This translates to 1.81% when annualized. For Class C shares, it was $132 or 2.56% annualized. And for Class I shares, it was $81. Or 1.56% annualized. These are the fees you pay for the fund to be managed. The differences between the share classes reflect varying sales charges and management fees. Let's switch gears and look at another fund, the Alpha-Centric Life Sciences and Healthcare Fund. As the name suggests, its focus is quite different. The asset weighting here is heavily skewed towards common stocks at 96.6% with only 3.4% in money market funds. The sector weighting confirms this focus. Healthcare dominates at 96.9%. This fund is all about the healthcare and biotech industry. Looking at the top 10 holdings, we see major players in the life sciences and healthcare space. Gilead Sciences, Inc. is the top holding at 7.9%. Then we have Vertex Pharmaceuticals, Inc. at 6.0% and AstraZeneca plc at 5.3%. These are all well-known companies in the pharmaceutical and biotech sectors. Now for something a bit more unique, the Alpha-Centric Premium Opportunity Fund. Their asset weighting shows something really interesting, 95.6% in money market funds and then 10.5% in purchased options. Wait, that adds up to more than 100%. This is a key signal that tells us they are likely using leverage or engaging in strategies that amplify their exposure, like using options to bet on market movements rather than just holding assets. In this case, they are likely selling options to generate income that offsets the cost of buying other options or hedging. The sector weighting breakdown shows 71.0% in money market and 25.7% in other assets in excess of liabilities. This structure suggests a fund that primarily aims to preserve capital through money market instruments while using derivatives like options and futures to potentially generate alpha or hedge risk. The 3.3% in future options also points to active derivative trading. The top holding here is the first American Treasury Obligations Fund, Class X, at a massive 59.7%. This is essentially a money market fund holding US Treasury obligations. Then we see Fidelity Investments' money market government portfolio is another big chunk. So even though they are investing in options, a huge portion of their capital is parked in very safe, short-term government debt. The other holdings are mostly options like S&P 500 M&E options with specific strike prices and expiration dates. This confirms a strategy that is very different from the other funds we've looked at. They are actively trading options, likely aiming to profit from market volatility or hedging their positions. Looking at costs for class of shares of the AlphaCentric Premium Opportunity Fund, the costs were $120 for a 6-month period. That is 2.24% annualized. Class C shares cost $160, or 2.99% annualized. Class I shares were $107, or 1.99% annualized. These higher costs are often associated with funds that employ more complex strategies like options trading, as they may incur more transaction fees and require more specialized management. P Mutual Fund Series Trust MPP 4221 North 203rd Street, Suite 100P Elkhorn. Nebraska 68022 BIDP Advisor, WP AlphaCentric Advisors, LLC BY 207 Caladel Park, Am Tower Floor 7 Suite 2 Badia San Juan, PR 00912 BIP, Administrator ThydP Ultimus Fund Solutions, LLC 5P P225 Victoria Drive Ive, Suite 450 Funny P Cincinnati, 045,246 BDP. This report doesn't just show us numbers, it shows a strategy. The Income Opportunities Fund is all about mortgages. The Life Sciences Fund is betting big on healthcare innovation. And the Premium Opportunity Fund is playing a smarter game using options and money markets to potentially boost returns while trying to control risk. When we look at these financials, it is important to remember Warren Buffett's advice to understand what you own. These funds are essentially baskets of investments, and understanding their core strategy is key. The AlphaCentric Income Opportunities Fund's heavy reliance on mortgage-backed securities definitely carries risk, especially if interest rates fluctuate or the housing market faces stress. The healthcare fund's focus seems solid, but biotech is always a volatile sector. The Premium Opportunity Fund's use of options is where things get most interesting and potentially risky, but also where the possibility for higher returns on very safe assets, like treasury bills, is pursued through aggressive strategies. These reports reveal a lot about how these managers are trying to grow your money. They are taking different paths, from steady income generation to aggressive growth strategies. The key takeaway is that each fund has a distinct approach to the market, and understanding these approaches is crucial before investing. Looking at undistributed ordinary portfolio income, the AlphaCentric Income Opportunities Fund has a significant $338 million in undistributed ordinary income for tax purposes as of their last fiscal year, and that is a large amount that hasn't yet been distributed to shareholders. For comparison, the AlphaCentric Premium Opportunity Fund has a much smaller $1 million in undistributed ordinary income. This difference highlights how different funds manage their earnings. And finally, a quick check on the net asset value per S-Hair. For Class I shares of the AlphaCentric Income Opportunities Fund, it stands at $7.42. For Class I shares of the AlphaCentric Premium Opportunity Fund, it is $30.86. The fact that these numbers change and fluctuate is what investing is all about. So, what is the verdict? These funds offer very different approaches to investing. The Income Opportunities Fund is playing a traditional, albeit concentrated, game in the mortgage market. The Life Sciences Fund is betting on the future of healthcare, and the Premium Opportunity Fund is employing a more complex, potentially higher reward strategy. It is a reminder that understanding the strategy and the risks is just as important as looking at the returns. Which fund do you think offers the most compelling opportunity right now? Let me know in the comments. Don't forget to hit that like button if you found this breakdown helpful, and subscribe for more corporate decodes. And as always, check out the Discord to keep the conversation going. Thanks for watching, and I'll see you in the next video.